The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 10th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. My outcome this morning, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with some empowering beliefs, words of wisdom brought to us by our extraordinary producer who makes everything that I do seem so seamless. And I can assure you it is not. And that's our man, Al. And Al starts his day with the following incantation. It's a beauty. If you haven't written this down, you should. He starts off his day by saying, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And watch your character, for it becomes your destiny. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Great to have you here with us. You know, one of the things I did not do in the last hour was take a look at JetBlue. Had a request to do that, so we'll do that here as soon as we get the market update. We've got the Dow trading off 45 points right now. It's trading out at 16,897. S&P Dow 6 points, trading at 1944. Composite off 16, trading at 4320. Russell 2000 leading the charge right now to the downside, off 0.6%, off 7 points. NASDAQ 100 off about 8 points. New York Stock Exchange off 40 points right now. Net decline in issues 1030. I think the number 6, I have to write it down, 1,600 and some odd issues to the downside would go ahead and give the Bears the ball of the market. We've got Goldilocks trading up $6. It's trading at $12.60. Silver's up 10 cents, trading at $19.70. Light sweet crude is up 40 cents, trading at $7.9276648. Platinum is on the rise this morning, up $27, up nearly 2% as we speak right now. Let's go take a look at JetBlue, just so I don't forget to do that out here. Had a request to take a look at it. JetBlue right now is trading down 12 cents for the day, trading out at $10.34. I don't know if the request was to go long or go short. Let's take a look at both sides of that trade. JBLU is the ticker symbol, out with a luxury liner, I believe, today. That luxury liner taking you from New York to L.A., I believe, out there, and looked like pretty cool first-ish type class seats out there. If we take a look at it, the resistance level here, if you're trying to go long of JetBlue on a daily basis, you want to see it close above 1050. Well, I would have to say you'd want to see it close above the actual swing point from June 9th, and that high out there is 1061. If you can close above that with more than 11 million shares, I'll make sure I got the number right. Yeah, 11 million shares out there. That would be nice. Otherwise, support looks like this will pull back to about 996. That's on the daily basis out here as we speak. Let's look at a weekly chart for JetBlue. It's had a nice move on the daily chart. Take a look at this. It's had a nice move off of the lows back in April, down at the 760 level. So that is a nice percentage move for sure. Let's take a look at its weekly areas of resistance and support using its market profiles out here. Resistance, it's well above resistance. So if this cracks the daily support level, this ought to pull back to about $9.04. Again, I'll give you that daily number. We'll take a look at that, and that is what JetBlue looks to be doing. The daily number for support would be 996. So if it busts that level, it'll pull back to the weekly area of support. Let's go out to British Columbia to our man Rick. Rick, thanks for calling. Thanks for holding. How you doing this morning?
Hey, really good, thanks. I liked your analysis on the Qs. I don't know if that was yesterday afternoon, I think, wasn't it?
Could be, yeah.
And so, like WFC is the one I asked you about.
Okay, Wells Fargo, yeah.
Okay, and the reason that one is probably a good bellwether is, unlike BAC and JP Morgan and Goldman Sachs and everything, this one here has gone to new highs, right?
Yes, absolutely.
And it looks to me like this thing could pull back to about 49, and I'm just curious where you think it.
That's pretty cool. That's pretty cool that you threw out the figure 49. So if we just use the market profile, and you're exactly right. I mean, if I put this back, and what Rick is pointing out, if we put this on a monthly chart out here, and it just shows you the difference of a well-managed institution versus the others, like you'd mentioned, Bank of America, Citi, or what have you. And you go back even to the financial crisis. Their CEO is, he's been consistent with regard to, hey, we didn't need the money. We didn't get involved with all of that garbage debt out there. And absolutely, it's at, it's new time high. Its all-time high was made yesterday, I believe, when it got up to the 80 or 52.57 mark. So you can see well-run company getting rewarded here. Now, you mentioned the 49 area, and if 49 holds, then it won't see the unfair high or its market profile of 44.78. If in fact that were to break, it's probably 44.78. That would be the mark. But what's interesting, you picked out 49, and 49.36 happens to be what's referred to as the unfair high or the resistance level of its market profile area. So you've got, however you came up with that number, Rick, it confirmed it for you.
Well, there's a little gap down there. You just put it on a 1-month chart.
Okay.
And, it kind of, like, I know what you're saying. Like, it could go down to, what did you mention, 44? I got to put it on a longer
40,
chart.
yeah.
There's volume down there, too.
Yeah, the volume. Well, there is. They're both. Yeah, and what Rick's looking at is April 11th, folks, where there was some volume down there with about
75 or whatever it was, right?
Yeah, exactly. 46.72 looks like.
And then if you put it on a weekly, and if you match that up with your cues, just to say, okay, where can things pull back? It broke. It's not an ABC up on a weekly, right? I mean, it just doesn't have the volume.
Well, if you use the swing point from March 31st, which had 75 million shares, you were up and over it with only 54, 56 last week. So yeah, exactly. You're not over with volume, no question about it. And
then if we just real quick, so I'm just saying WFC looks like a nice bellwether just because it is a stock that went to new highs, and you know what I mean. But anyway, the QQQ, you put that on a weekly too. It blew my mind. We went higher last week. You see how we broke the 88.50, 88.77, whatever it was?
Yes.
Second week in May, we took that out. I mean, on fumes.
Well, in this case, the QQQ you'd use, I would use March 3rd as the swing point. 90, looks like the high there was 91.36, and that had volume of, looks like about 154 million, and, it was crossed with light volume, 123 million, 130 million from last week. Volume, Rick. My interpretation, especially watching how things have moved off of the March 2009 lows, and then doing some analysis of just overall markets. If broken down, the volume only represents a portion. There's really, in my opinion, there's really four areas that you need to be focused on and paying attention. And momentum is one of them, because, if the momentum can trump volume, and where volume then comes into play is when things fall out of bed, you have to be careful, because where you're going to find support is at that volume aspect of it. You know what I mean? And how I started really moving towards that thinking there, Rick, was the fact that when I started learning how to trade currency pairs and currencies, you don't have volume that you can rely on. I mean, you can go take a look at the futures contract, but you're only going to get a small percentage of what's really going on inside the currency market. Yet in the currency pairs, they're making these A to B equals CD patterns all the time. Mm-hmm. And if you use the same, and so I thought maybe, instead of, and I don't like to be hypocritical of myself or anything, and so I thought, well, if that's the case, if I'm saying it doesn't really matter what symbol I'm looking at on a chart, right? So it shouldn't really matter whether it's currency or whether it's a commodity or whether it's an ETF or whether it's a stock. Just to understand those lightning bolt patterns and the mere fact that they make one-to-one patterns, 60% of the time out there, that it's okay to go above a swing point on lighter volume, and that you just always have to be aware that if something falls out of bed, that's where it's going to fall to. And that's why I started using, I said, hey, look, you can use like the RSI as a momentum indicator. You can use the stochastics as a momentum indicator. And so that's another. So I say volume is important. Momentum is important. I think that you also have the angle. The power, like David White's got the power law vector indicator. I think that's a great tool for being able to understand the power of the angle. The A to B equals CD tool helps us to do that as well, the power of a move. The MACD is another nice tool. I mean, there's so many tools out there that you can use for different areas. So I've kind of broken the markets into 4 chunks, and it's okay for. So I think in the case of Wells Fargo, just as an example, or even in the case of the Qs out here, in the case of Wells Fargo, it's trying to completely upside, even without volume, and it's okay to be able to do that. In my opinion, in my analysis, I mean, if we say that we're going to trade. That you can, it doesn't really matter what you're looking at on a chart as far as instruments are concerned. In the case of Wells Fargo, it's 1-to-1, takes you up to about 53.04, and it's trading right now at 52.30. So does that, so from a volume standpoint, that's my take on it.
Yeah.
On volume.
I guess there's volume, momentum, and then draggy.
Well, yeah. I mean, that's really so. When you take a look at liquidity, that's when I started looking for. That's when I started for my journey. I started looking for currency pairs that emulated the stock markets consistently, and that's where I came up with the Euro Japanese yen that really tracked the stock market way better than the U.S. dollar index out there, way better than just the Euro U.S. dollar, and so you've got to somehow, how do you account for that? And I think you can account for that just simply by taking a look at momentum, which is why I created what I call the Rhodes Momentum Indicators, because I think that did a better job of helping me to get past, do you have to, if you have volume passing the swing point, I think what it does, Rick, it increases your odds that you're going to complete that, but it doesn't always. If it always did, then you could just wait for price to pass a B point, right, and then get in on the trade. Mm-hmm. But you know as well as I do, if you were to do that, I think you end up coming on that it doesn't always work out that way. So if that's the case, if you can pass a B point with volume, and it doesn't always work, I think you can pass it with light volume, and it's just you got to pay attention to the lightning bolt. And you always have to pay attention from a stop standpoint.
Well, I'll be honest with you. I would say that when I first started watching the volumes back in about 2000, 2003.
Yes.
They were way more consistent than they have been lately.
Absolutely.
For some reason, like you just put the daily Qs on for 3 months. I mean, if you're long, I'd be nervous. So,
right.
If you look at the volumes.
Exactly.
Okay, well, thank you very much.
Hey, thanks so much for calling, Rick. That was Rick in British Columbia. And remember, folks, you can always call in internationally to us at 727-446-7980. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 33 points right now. S&P is off 4. Biggest damage percentage-wise inside the Russell 2000, off 0.5%. Trading down about $6 right now, out at 11.70. Big movers in the market here this morning. You've got Netflix up $11. Receptos Inc. RCPT, I believe that was a Phase 2 drug trial, something worked out well there. It's up 35%, up $10. Virginia Heritage popping into the fray out here. VGBK is the ticker symbol. That's up 30%, up $6 and change. Amazon's up $5.50. Molson Coors, we're going to go take a look at what's on tap for Molson Coors. TAP is the ticker symbol. Let's go see what it's trading up into. Take a look at any kind of patterns out here. So well above its unfair resistance, its unfair high level, which was at $66. Here at $70 right now. Let's take a look at the larger term time frame on it. Let's take a look at a weekly chart for Molson Coors out here. I do like Molson Coors, a little too watery for me when it comes to beers. If we take a look at expansions of swing points out here, because we'll see if we can draw in using this, we'll see if we can draw in a potential butterfly pattern. So the expansion of swing points we're going to use is the May 1st, 2008 high down to the low that was down here. This is on the trading session of March of 2009. How about that? And if we take a look at it, well, it's past the 1.272 expansion, which would have been $67.33. You're at $70.52. That says the 1.618 expansion is where it's headed to. That's $77.28. If we take a look at the A to B equals CD pattern off of the March 2009 lows, let's do that out there. The A point is going to be the March 2000. Oh, come on, there we go. Oh, that didn't work real good. Let me start that off. Well, I guess maybe it did. The B point on this looks like it is going to be the trading session here from December 1st, 2010, and the C point down right around the level of October 1st, 2011. It's a weekly chart that we're looking at. That was at 37.99. Boy, a lot of lines on my screen. But what we can see, it looks like consistently you're going to have a 1 to 2 A to B equals CD and a 1.68 expansion right up in the looks like 78, 69-ish type area. It looks like that is where Molson Coors, TAP is a ticker symbol. It is right now traveling at the 1 to 1.618 A to B equals CD. So in order to fulfill that objective, you want to see it get a close above $70.92 out there. So not too shabby. If we take a look at volumes getting past that B point, we're just on the phone with Rick from British Columbia talking about volumes. In this case here, TAP, Molson Coors Brewing, the B point volume was what looks like it's about 17 million shares out there, and the B point was passed with volume out there. So there's your A to B equals CD on a weekly basis, where you did get past a B point with volume. It is coming to fruition and completing the pattern as we speak out here, and that is on TAP as the ticker symbol. Let me just get rid of this out here, clean this chart up, see if I can do that here. There we go. Let's go take a look at what else is moving in the marketplace here. LinkedIn is up a couple of bucks. Let's take a look at to the downside here. Bard CR Inc. BCR is the ticker symbol. That's the leader in the clubhouse on the way down, off about $5 and change. Let me switch this back to a daily chart out here. Oh, that was a monthly chart we were looking at inside of Coors out there. Daily chart right now showing that it's pulled down into its unfair high, its support level right in the 142.20-ish area. It's trading right now 142.45. If it breaks that area, this thing ought to trade back to about 139.31 out here. Breaking a recent swing point, looks like with some volume. That I'm referring to is the trading session of May 15th. That had volume out there of 792,000 shares. So far today, 392,000 shares out there. So it's got some volume inside this. It's got a swing point that it's trading into that also had volume. Now, that is wide price spread. That is the day of, and this is a ticker symbol, BCR, the day of April 23rd. The volume on that bar happens to be 1.5 million shares. So now what I would say is that if it closes inside that high, does not reject that high being 144.20, you're trading right now 142.65. You know, volume, as I say, is 1.5 million shares, and you've already done 393. Looks like you're coming back into that swing point with volume. That says it ought to go test the low. And so that's what I would be looking at inside of BCR. And that low is 132.81. You've got BE Aerospace. It's off 4.5%, down 450 right now. This is just trying to test its resistance support area, which was created by this little bullish engulfing candle, which is inside this little gap here. That's the low from the trading session of May 30th. Thus far, it's held. Volume on the pullback this morning, looks like 2.3 million shares so far, but it's moving into some wide price spread accelerated volume. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 22, S&P down 2, Composite off 5, Russell 2000 off about $5 out there. Now, during the last show, during the opening show, the 9 to 10 o'clock show, we were taking a look at the, futures were trading off. When I did Tom's show last night, I filled in from 4 to 6. My signals, my indicators then, as we were doing the 4 o'clock show, was that the market wanted to do a bit of a retracement here. And the market does want to work off its overbought condition. But again, my contention is that it's a retracement that you want to buy versus a retracement that you want to sell out here. Very strong market that we are in. Now, if I take a look at the Dow futures specifically, let me just reload the data out here. There we go. Okay. There we go. What we really were looking for, what I was looking for, especially as we're getting finishing up the last hour, in the case of the Dow, which has been acting strong here as of late, I said it needed to see a close below 16,904 to indicate that the selling pressure would continue. And what took place coming into that 10 o'clock session here was where the close was at 16,906, 2 points away. Those 2 points mean anything? Yeah, they do. They mean they mean a huge amount when you take a look at the strategy, at least the strategy that I follow. Now, we're in the next 120-minute session. That means you have to wait till 12 noon. 12 noon, you get a close below that same price, and yeah, that says okay, we've got a retracement that is underway out here. But I don't think it's the big one. I don't think it's the big one. Elizabeth, that's right. That's the one from Sanford and Sons out there. That was inside the Dow. Of course, we go take a look at the NQ out here. That led the market down, led the market up. And, of course, we're seeing nice, strong moves inside the IWM. Russell 2000, the last 4 or 5 sessions or so has been leading the markets to the upside. That is nice and bullish. If we take a look at, let me just find the June contract here for the NQ. The numbers that I was looking at inside the NQ in order for selling to continue for the day, in order to give you kind of a forecast, the low that needed to be closed below 37.84.75, and we have not seen that as of yet right now. In fact, it'd be quite bullish for it to move above yesterday's high, and that is at 38.03 out there. Now, Rick from British Columbia had called, and he had mentioned the Qs, and I obviously doing 4 hours yesterday. I can't recall which analysis of the Qs, but during Tom's show, I showed this chart out here. And this chart here with the interesting, because we're going to talk about volume and so forth, and Rick was absolutely correct that over the course of the last several years, volume hasn't had the consistency with regard to trading. Now, the consistency that it has maintained, in my opinion, is that when something falls out of bed, it moves down to those volume bars out there. That's what you have to look at as potential support. And that's because that's where you have the large funds coming in. If they're still around, they're likely going to support price. If they thought it was a good buy then, they'll think it's a good buy now. And if it closes below that, then it is good buy. But if we take a look at the Qs here, the interesting aspect of the Qs themselves, they have a different characteristic. And that characteristic is that it makes bottoms with high volume. And go back and take a look at it on the chart. It doesn't always happen that very next day. Most times it does. But it makes bottoms with high volume. In fact, it's the exact opposite of what we've learned or what we would learn out here. But let's face it, our role as pattern recognition people, I was going to use the word experts out there, but I don't want somebody to, let's just call us as pattern recognition technologists. Ooh, let's see, pattern PRTs. Yeah, we're PRTs out there, is to identify a pattern and identify a consistent pattern. And one of the most consistent patterns with regard to volume that's been working for several years is that the Qs make a bottom, make a low with volume. Likewise, they also make highs with light volume. In the last 4 of 5 trading sessions, the Qs have given us that little toppy feeling out there. Now, the butterfly pattern and the Qs are certainly in the overbought area. If you use the 14-period relative strength indicator, the Qs are certainly in the overbought area, and getting up to 93.50 would complete a 1.272. It's been up as high, yesterday's high inside the Qs, no reversal signal or anything, was 92.98. At this stage here, we've got no reversal signal inside the Qs. In fact, I'll put up the NDX. I'll do that in a moment, because there we had a doji candle, I believe, that took place yesterday. So we'll take a look at that. That does have some meaning, knowing that we were up against a pattern, and that says that my expectation is that we will see some type of retracement to work off the overbought condition. But I don't think it's the type of retracement that gets us down to the oversold condition out here. And in fact, the market could just move sideways for a while and work that condition off and then go on to its next level out here. So there's the butterfly pattern. Go and check out the ones that stick out that are easiest with regard are picking out the bottoms inside of the Qs, because they are even more consistent than the low volume highs that form. But nonetheless, 4 of the last 5 trading sessions inside the Qs have been on light volume. I mentioned the NDX. Let's put the Rhodes Momentum Indicator system up here on the screen. This is one that's designed to help us take into account, the factors of the market. And the 4 factors, the way I look at it, are velocity, which is really the same thing as momentum and speed. And there's a couple of dozen indicators out there that are developed to identify velocity or momentum and speed out there. Just become a master of one of those. Then there's another area of the market or a stock, I call it the energy, the energy angle, the verticality, if verticality is a word out there. And, there's a number of tools. There's another dozen or so tools, great tools, indicators that can help you to measure that. Verticality, just go with MACD, velocity, use relative strength, or use the stochastic out there. And then verticality, you can use a power law vector indicator, which, comes with the art of time in the trade charts out there. Then you've got volume. So you've got supply and demand. That certainly has to be an aspect. And then you've got volatility. You've got liquidity type gauges. Those 4 tools will help you to identify what's going on inside any stock. Now, in my case here, what I do is I create the light blue patterns, light blue color, to help me, just because we're all visual. It comes to learning, we're mostly visual. That's how we learn things out here. When you see light blue show up on my screen, it's telling you that the buyers are certainly in control of the market. You're in a Super Bowl type mode out here. And yeah, yesterday's candle was a doji, and dojis have meetings at resistance. And the only way we can identify resistance inside the Qs, because they're in essence at all-time highs out here, right? The only way we can identify resistance are near the completion of patterns, and that's where that 1.272 butterfly comes into plane out there, and that says that the market is tired. Of course, if it closes lower today, the leaves start falling from the trees, and then the first area of support, maybe that's down around the 37 area. Maybe it's down around the little rising window, the gap up that took place in the trading session between May 23rd and May 27th out there. We'll just have to assess volume as the market works off an overbought condition out here. But as strong as it is, and that's the daily chart here. If you go just take a look at the monthly chart of the Qs and take a look at this, it's been in the strong bull mode since September of, September of 2012. Hasn't moved out of that strong bullish camp out here. In fact, in this case here, you come all the way back. This indicates on a monthly basis that one should at minimum have been long the markets. This is back in April. So the real signal, I'd have to say, the real signal took place here April 2009. Didn't have to wait. Didn't have to catch it right at March of 2009, where you did have that nice bullish engulfing candle. But as you take a look at the moving averages, a great moving average out here. It's never had a cross back. It's never had a bearish cross to the downside on a monthly chart out here. Pretty cool. Nothing but long and strong. And then when you take a look and you put into consideration, this chart, let me put this chart up here on the screen for you, because I think this is kind of cool. And so just waiting to see how this is playing out. And that's this chart. This is the NASDAQ composite. Now, the NASDAQ composite, going back into the 2000 time frame, you'll see these little humps on my screen out here. Those little humps are meant to measure cycles. So it's a great little cycle tool. And those cycles say that the NASDAQ, going back to 2000, every 23 months has identified a significant swing point, high or low, out here. And, if you go back and you take a look at it, that takes into account that September of 2002. That is August of 2004. That includes August of 2006. That includes a high that came in June of 2008. The one back here in there was a significant swing point in June of 2010. In essence, marked a low out here. If you take a look at the swing point that came in May of 2012, that identified as swing point low. So what's really interesting about this pattern here, if I blow this up on my chart here, what's interesting is the next pattern was supposed to take place in April of this year. In April of this year, we saw the market move down, didn't we? And that at this stage may be a swing point low, which is pretty wild. Now, the actual consolidation break target, the measured move, which is when you break a consolidation, your move goes to, equal to or greater than the consolidation out here. 4,400 is a target. You're 4,327. I know they talk about Dow 17,000. Heck, I'd be talking about composite 4,400. And the key is that the swing point here, the all-time swing point high, which is from March of 2000, low is 43.55. So 43.55.69 is a real important number to be watching. Why? Because if in the month of June you close inside that level, you close inside that swing point, volume or not, it says you can go test the high out there. And so that is an important number to be paying attention to inside the market. So there are reasons to be maybe optimistically cautious, in my opinion. But when you kind of put together longer term, what the messages are, different patterns here, it's going to be, it's unlikely that the market is going to move lower without the NASDAQ, certainly without the Russell 2000 moving in a southerly direction. And the Russell 2000, it broke its consolidation pattern. It broke its 500-point, its 11-year consolidation pattern, and it broke it with some conviction back in January of 2013. And that says its price objective is 1350. You're at 1169 right now. And inside the Russell 2000, what it needs to do, because, I mentioned the doji candle inside the NDX earlier, and that was looking at yesterday's candle. That was a daily candle. Inside the Russell 2000, as it moved up into the top of its rising price channel out here, it also created a little doji candle. And then the month here of April, we saw the leaves falling off of the tree. Those leaves falling off of the tree, in fact, they continued on. We saw a little bit lower low in May of 2014. But what's interesting is if you take a look, if you just simply run a trend line, and trends are your friends, they give you a lot of information. If you take a look at the trend line of the tops, and that means the top of March of 2000 as well as the top of June of 2007, what's interesting is that the move down here that we've seen thus far in the market has been held by that trend. Now, when you break a trend, now, this we can't really say you were breaking a trend, can you? Because price was moving, so it was already in a trend. So you really weren't breaking it, unless you say breaking a trend to the upside, which is held as a resistance level, as a break of a trend. Let's just go with that as a possible interpretation out here. Well, if you do take a look at it, that area so far is held as support. Look, if the Russell 2000 can get above that doji candle from March of 2014, the high of which is 1282, that'll be extremely bullish, because that was a bearish reversal signal out here, and if that old resistance then should become new support, that's if in fact they can get over that. And the monthly chart says it will eventually, because it wants to at least go finish off that measured move and take us up into the 1350-ish type area. That's what's going on inside of the Russell 2000. So let's go back and take a look at some individual stocks. That's my read on the markets as in trying to put together some smaller pictures, smaller time frames, as well as larger time frames to help you understand as well what is going on inside the market. And also at this stage, if we take a look at one more thing, and that is at least one more thing, and that's my favorite currency pair. I hope it's your favorite currency pair by now, and that certainly is the Euro-Japanese yen. And if I put that up on my screen out here, Euro-Japanese yen, and it's really the weekly chart that we want to be paying attention to, because in this case, the Euro-Japanese yen, this red line, going to a horizontal red line, that is a resistance level, which the Euro-Japanese yen on a weekly basis was able to break through that area. It broke through it here in the month of November, and that is a resistance level that was broken through, came back and tested it and rejected it, moved a bit higher, has come back and tested it again. So far, that level has held, and as long as that holds, that bodes well from the longer-term fuel for the fire to be able to move the markets higher, using this as one of our liquidity gauges, and it is a great liquidity gauge inside of the markets. Best currency pair liquidity gauge that I've been able to identify that has the most consistency with the markets. And then what's interesting about that is we've seen a bit of a sell-off inside the Euro-Japanese yen the couple last two trading sessions out here, but really all that's doing is setting up the A to B of a CD to the upside out here. Now that's got to be changed a bit, but as long as this 0.786 Gartley buy pattern holds, that means the Euro-Japanese yen needs to stay above 137.96. Then you've got a nice little Gartley buy pattern that suggests that it wants higher price, and if it wants higher price, that's just additional liquidity inside of the markets. And at this stage, it says it wants to move up probably to the 141.85-ish area. Right now, we've got the Dow off 18, S&P down 2, Composite off 4 points. Steve Rhodes, TFNN, will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Now, in the first hour, we were taking a look at, I was trying to put up a number of stocks inside the GDX out there. We took a look at a potential trade inside the GDX, and because of the data feed that I had running, it wasn't picking up some of the individual stocks. Now, this represents the majority of the stocks that make up the Gold Vector Miners Trust out there. It doesn't include some of the international stocks, some of those coming from Toronto Exchange, or there's a stock or two, I think, from Mexico and a couple other countries out there. This is the Rhodes Momentum. This is the market analyzer. So in a flash here, I can identify what the trends are. You know, the trend is your friend out there, and fighting the trend is a dangerous thing to do. I'm not saying don't do it, but it's if you want to take a look at the strongest equities inside of the GDX out here, I would have to say that the strongest one is Eldorado Gold. EGO looks to be the strongest. I Am Gold, IAG, looks to be pretty good too. New Gold, NGD, looks to be pretty decent out there. Those three look pretty good. Let's go take a look at these individually now. Let's go and let me come over here to this page here. And let's go ahead and we took a look. I was saying EGO was one, IAG was another, NGD. Those aren't the only ones. Those were just trying to take a look at ones where monthly, weekly looked pretty decent out here. Let's go take a look at the market profiles. Let's take a look at El Dorado Gold. EGO, it's up 11 cents. This morning it's trading out at $6.12 out here. And in order for this to really get bullish using the market profile, what it needs to do today is close above its unfair high. That's $6.11. It's trading at $6.12 right now. So I would say you don't need to jump in on this. And support, in this case here, there was a hammer candle. Even though the unfair low is at 593, I'd say your real support on this equity is the hammer candle for May 30th out here. And volume-wise, a little doji on the trading session of May 28th out there. But, a short-term trade, if this closes above 612, then what you're going to deal with here is you're going to deal with the swing point. And the swing point is really from the trading session of May 5th out there, and that's got 2.3 million shares. Yesterday you were moving higher with 1.94. The day before, 4 million shares. So that's a nice sign of strength on a daily chart. El Dorado Gold off of the bottom. So that doesn't look too bad. Let me see the weekly chart. What shows up as the resistance level may be that swing point area. No, the resistance is going to be this 706-ish type range. That is on El Dorado Gold. Let's go take a look at one of the other ones. I got a minute here to maybe do this, so let's try to do them both if we can. IAM Gold, IAG is the ticker symbol. It's up in nickel right now, trading out at 371. Hey, boy, daily, this thing is up above its unfair resistance area and did it with wide price spread. Wow, take a look at this. This is on the trading session of June 3rd. That's called wide price spread, accelerated volume off of the lows. That's IAG out here, so that looks pretty good. This thing wants to make a run for the March 14th swing point in the 435-ish type area out there, so that looks pretty strong. That was on the daily. Real quickly, let me flip over to the weekly chart. I would imagine this is above its resist or its support area. No, it's not. This says, yeah, it is. It's above that area. I just need to expand it out. So, this is nice on the weekly chart. 363 is the unfair high, is the resistance area. So that's what that little quick scan does for me. In the blink of an eye, I can go take a look at what's the strongest going. So you can either play the sector, the entire sector, and they got a basket of currencies. Some are strong, some are not. Or you can go try and take a look at the strongest ones that are out there. So, folks, it is Terrific Tuesday. That means we got our man Basil Chapman in the Options Hour, Daryl Martin, David White, Andy Heck, and the Tom O'Brien Show from 4 to 6. What a great lineup. Take care, folks. Have a great Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.